Well, I have Allison with me today. She's, of course, my product guru, my favorite friend to rap with when it comes to what kind of programs we have available, how we can all help buyers get into homes. And we love having our agents participate with us. So today, being it November and, a really nice time to thank those that serve our country, have been veterans, we thought it would be a great opportunity to talk about the VA loan. And Vanessa brought in a good point, with a lot of things that have been going on, the government shutdown, all the other pieces, a lot of that's impacted, of course, maybe even some of the buyers that you've been working with over the last couple of months. We've seen where people have kind of like slowed down a little bit just to make sure to see what's going to happen. So imagine you guys are probably seeing the same thing, but we're going to go through the VA loan options, kind of some tips and tricks to help you, if you're writing a contract for a buyer that's using the VA loan, even for a buyer who's maybe even used their VA loan before but not exactly sure how they can use it again. Allison's going to give us all that good scoop and help us get some more VA buyers in homes this year, into early next year, and on and on. Okay, so Allison, you want to give some insight on the VA loan to start with?
Sure, and some of this will be refreshers for you all, and some of it may be new if you're new to the business, or if you don't do VA loans as standard practice. So just a VA loan in general is backed by the U.S. Department of Veterans Affairs, and it's designed to help active duty service members, National Guard, reservists, and some surviving spouses, and give them more favorable terms than, let's say, an FHA or a conventional loan would. And the favorable terms and the flexibility of veterans loans are the fact that there's no down payment required in most cases. There's no private mortgage insurance, which, if you've ever dealt with private mortgage insurance, that can increase your cost by several $100s a month, depending on your loan amount and the type of program you're doing. There's more competitive interest rates for these buyers, more flexible credit and income underwriting requirements, because at the end of the day, the Veterans Affairs wants to do everything they can to get veterans in homes and make it as easy as possible for them. I always use the statement, and maybe it's not a great joke, but I think if the Veterans Affairs could offer a free car with the move-in of your home, they would, and allow it if we could also make that happen, because they really do. They want to make it a good experience for the veteran. You all have served for us, or been a part of a serving family and made a lot of sacrifices, so they want to give back in that way. It does limit closing costs, and the VA allows seller help. Seller can pay all your closing costs. Seller can pay 4% of the sales price in concessions. So there's a lot more flexibility on what the seller can pay for on a VA loan than a standard conventional loan, FHA loan as well. You're more restricted there.
We'll probably talk about this, but you can even get some of your debt consolidated, right? You can pay off some of your debt with the seller's help.
Yep, you can. That's absolutely a great point, Mindy. And then your funding fee exemptions for certain disabled veterans, and that's a really good, important thing to know, that when you're talking to your veterans and your active duty service members, do they have any disability claims pending? That can really hold up a veteran from closing on time if we find out later on in the process or at closing. We don't want to find that out later. Ask them ahead of time so we can start getting that process, because it does take some time with the VA, especially if they're in an active disability claim and that's pending. We want to make sure that they still meet their closing date and we get everything set for them, and we don't make them pay more than they need to pay if they have disability claims that are active and waiting to be cleared up or, approved.
So with some of the agents who work with a lot of VA buyers, Vanessa, you're like pinned in front of my face, so I apologize. I'm probably going to pick on you quite a bit, but do you do kind of an intake form with your VA buyers to ask those questions? Like, are you disabled? Have you used your VA before? Do you ask those type of things when you're working with them immediately?
It is part of my buyer consultation. 9 times out of 10, majority of my business is referral based, so I already know a lot of this information. Majority of them are active duty right now, but if they're veterans, like people that I've actually worked with and served with, I'm already tracking it, but it is part of my buyer consultation, kind of to answer your question.
Very cool.
Also
I
to
think that would be great to add if you're not adding that when you're working any buyer. If you know that they're using their VA loan, I think those are some really good questions to ask.
I'll pick on Vanessa too, because it's Wendy, myself, and Vanessa. We're like in a row, so Vanessa will get picked on a lot. Vanessa, during that process, do you also ask or get the information whether they have any kind of child support, or if they're paying any child-related expenses for daycare or anything like that, to make sure that that's accounted for?
I generally don't. I really rely on my lender to kind of go through that if that's something I'm going to add
We
something.
do.
So
Yeah, I mean, it's just something that comes up, and they have to sign a form, they have to let us know. So, and we know how that works. The realtor is usually their first point of contact most of the time. So they come back to you and go, is that really, something I need to fill out, or I really need to tell them? They just want to be assured, because they've formed that bond with you first. So that's something that comes up too as well.
makes sense.
Eligibility requirements, we kind of a little bit touched on that with the understanding of it. But that, if you want to flip down to kind of key benefits, or go past that a little, we already kind of went over the key benefits there. Yeah.
Not the best driver when it comes to
It's
these,
okay.
you
I'm
just
really
start
fast.
talking, and yeah, I know. Sorry.
Yeah, I should have been the auctioneer. I like to talk really fast.
Right.
So service durations, just a reminder, if not brand new information for you, the active duty or veteran has to have at least served 90 days wartime, 181 days peacetime, or been 6 years in National Guard or reservist. Surviving spouses of service members who have died in the line of duty or from service-related disabilities also can qualify and use those benefits. So, they've been through a lot as well. So we like to, be able to support and help the surviving spouses as well. A COE you're familiar with if you've done VA loans, the lender pulls a COE. We give the ability to pull the COE up front to our loan officers, so it's not waiting for it to get to a processor. Our loan officer can start pre-qualing your veterans and active duty service members, and then get a pre-qual out. They can start pulling the COE when they get them to sign disclosures, and ensure that they qualify for the loan, what their entitlement is, if they've ever previously used it, if they have any disability or anything showing on the COE that we need to be cognizant of. So it's nice that we give that to them ability right up front. So your loan officer can pull it on the nights or weekends when you're calling versus waiting for the team in operations.
How long does it take to receive the certificate of eligibility back? Are they providing it this, HUD or whoever providing it back and telling you, like, if they've used their entitlement before? What are they telling you on the COE?
Like Kyle might have had a comment on that. I kind of heard him chuckle there, but it just depends. It usually can come back very quickly unless there's some issues with it for any reason, or if the VA site is down or having issues. But most of the time, I would say they turn around pretty quickly once you're able to get in and pull them. Has anybody had any different experience? Just curious. Any issues? No. Okay.
No, you can get them pretty quickly, so long as they're available.
Good. I was waiting for Kennedy to say something. I saw it.
I got on a little late. I was called on a phone call.
It's okay. Kennedy is one of our resident VA experts for sure. So he knows that he's been through it all and seen it all. The property the property purchase with a VA loan has to be their primary residence. So always keep that in mind. They're not purchasing second homes and investments, but that doesn't mean that if they purchase this as a primary, they can't later refi it into a conventional loan, turn it into investment, and then get their entitlement reinstored and use it again for a subsequent purchase. So you could refi the property into a different loan type, conventional, and so forth, use your entitlement again as long as it's restored. Or if you sold the property and you go to purchase a new primary residence, you can use your entitlement again once it's restored. So they can use their entitlement multiple times as long as it's been restored, or if there's, some left. And the veterans can also split entitlement. So if you have two veterans on a loan, two active duty service members, you can split that entitlement, and each one doesn't have to use all of their entitlement. You can also have a non-veteran, non-active duty spouse on the loan, but the veteran is the one using all their entitlement and the qualifications, so they're the primary borrower driving the loan.
What can you explain what you mean by split entitlement? How does that? What's the benefit of doing it that way?
allows each veteran or active duty service member not to use all of their entitlement for the transaction. So if they want to refi that property and then purchase another property, they're splitting what they're allotted from the VA. I might not be explaining it as good as Brian might want to jump in and kind of go into that in a little more detail if it helps, but
what I would add on that is, I mean, Allison, you're right. I mean, basically, you're splitting entitlement. Typically, the only time I do it is when they're not married. Basically, you split entitlement, and both of them take. If they're married, the reason I like one veteran to take full entitlement is the first time they use it, it's a 2.15% funding fee versus. I do not know, but it goes to 3.3. So if you had a married couple both split entitlement, to me it doesn't make sense because you're fulfilling that first time lower VA funding fee, and that doesn't really need to take place, in my opinion.
So say the spouse goes to buy the next one and they use her entitlement.
Right.
Would they still be able to do the 2.15 even though
Correct.
Okay.
Now, spouse A does the first house, they move duty stations. Spouse B does the second house, and they both would receive a 2.15 funding fee.
They both can be on each loan.
Correct.
Cool.
You do not have to use a spouse that's active duty does not have to use his or her VA entitlement.
Oh, I just learned something new. Thank you, Brian. Thank you, Allison.
yes, thank you, Brian, because I knew he was going to explain that from how he's done transactions before, so that was perfect. Thank you.
Yeah, I'm doing a surviving spouse right now. From a loan officer's perspective, the veteran, the surviving spouse, there's a form that gets filled out. We've got to have. Sometimes we need the death certificate. Right.
So you'll be agents today.
So got to have that upfront conversation.
But you also might want to.
Are you getting the death certificate from the spouse, or do you get that from the VA?
No, from the spouse.
Yeah.
You can. A lot of times you can get their social and the date of birth, and maybe I can't remember and see if it's available online to get a surviving spouse. Sometimes it is not, and that's when you need a particular form filled out. I can't remember off the top of my head what the digits are, but you got to have their death certificate sometimes to get the surviving spouse certificate of eligibility. That goes directly to VA. Rick, were you chiming in on something?
Yeah, I was just going to say there is an extra review time when you're splitting eligibility. So keep that in mind when you're writing your contracts. There has to be a special review usually that takes place with them as well.
That's a good point, Rick. So Brian, Rick, I mean, and when you're helping agents and you're the buyer on the transaction, when it's a VA loan, are you suggesting a 30-day closing still appropriate, or would you say 45 days? Like, what's a good rule of thumb?
Brian's, I'll just jump in real quick. The main thing is just the appraisal turn time. We can get them done if it's a traditional, the file's clean, just like any file. You got to look at the whole profile, not just the book cover, right? So if it's a standard veteran or, just buying a home, credit's all clean, you can close sometimes in 3 weeks to 30 days. If you're talking about split entitlements or doing something extra that might require an extra review, you might want to put 45 days because VA can take sometimes 10 business days to review stuff. So that's where you just got to have that good communication between you and your loan officer, I guess, to make sure you're setting up the contract correctly.
The things can be done too prior to them finding a home, right, and writing the contract. So the more you do up front with your loan officer and the buyer, the better off the transaction will go once contract's been ratified.
Correct.
Yeah, absolutely. I mean, I've closed VA loans in 2 weeks before, but with that said, we order the appraisal pretty quickly up front, and the one thing agents need to remember is VA appraisers, we do not choose. They are assigned. We have to go on the VA portal, put the contract, and hit the submit button. That is how we understand and how we learn who the assigned appraiser is. They have their own list. If it's non-VA, then typically we vetted an appraiser and have kind of guaranteed turn times out of them. But just like Rick said, it typically takes about 2 weeks to get a contract back. So when I say I've closed loans in 2 weeks before, It's just because the appraisal came back pretty daggum quickly, and we've done our due diligence up front, and that's how. But if you're talking about splitting entitlement and various stuff like that, that's something totally different. It just depends on how much upfront work we have done as to that turn time. So
I'm curious, for just my own giggles, why the VA appraiser panel? Like, and how many are most appraisers that do traditional, conventional FHA type of property? Are they on the VA list, or is it hard to get on the VA list? How does that work?
I mean, I don't know how hard it is to get on the VA list. I know prior to COVID's when everything kind of hit the fan as far as turn times. I mean, I hate to say it, and I don't know if this is still right. During COVID, we had appraisal turn times. Do not laugh at this, but they were based off of somewhere around 45 days. Okay. Just because we would order an appraisal. This is the Fayetteville, North Carolina market. I don't know about different markets, but the VA appraisers used to get paid $600 in our market, period. When I started, it was probably $400 or $350, but they were up to $600 prior to COVID. Well, these appraisers that were on the VA panel also were doing conventional and FHAs, and we as lenders, because we were so busy, we started paying them more. So they would turn those appraisals quicker, meaning USDA, conventional, FHA. So I believe to stay on the VA appraisal panel, you have to do maybe 4 a week. And in Cumberland County and our surrounding counties, being right here next to Fort Bragg, we didn't have enough people on the appraisal panel, and VA eventually came out and kind of deemed us as a hotter market, if you will. So they increased the fee to $800 to kind of put us back in line with other appraisals. Probably actually more expensive to go VA as far as an appraisal than any other thing we've got here. But that's kind of talking about turn time. Maybe I got off on a tangent. What was your original question?
I mean, I think it's interesting. I mean, I'm guessing that, and it's kind of a notch in your cap, right? If you're a VA appraiser, because you've had to do more appraisals, you've had more hours, it's so I mean, it's interesting. Yeah. And I do know, Allison, and this you probably can help with the answer to this. The appraisers for VA are looking deeper into the properties too than just a normal conventional, right? To protect the veteran.
100%. Just to piggyback off of that, I can remember after COVID when they had trainees that were working with the appraisers, and then the actual appraiser would sign off, but the trainee would do some of the report, and then the appraiser took onus of signing off for the trainee that the trainee actually did what they were supposed to do, because they were trying heavily to recruit VA appraisers and try to get more VA appraisers because they realized they were short-staffed. And I think one of the biggest misconceptions, and I hear it from the loan officers too, is that we think that the veteran included or the active duty service member thinks that a termite inspection is optional. Well, part of the minimum property standards for VA is they want a termite inspection. They want to know that this property is going to be sound, sanitary, and up to the property standards they've allotted in the lender's handbook online, to make sure the veterans move it into a sound place and they're not going to have issues after they close and once they get in and they're covered and they've been taken care of. So the termite comes up a lot. That's why I brought it into this while we're having the appraisal conversation. It's coming forward on the next couple slides when we talk about property standards, but I just want to put that out there, and I'll repeat it again because it comes up more often than not. But yeah, to go on about minimum property standards, I mean, the lender's handbook is online. Southern Trust doesn't have overlays to the lender's handbook when it comes to the property standards and underwriting of a VA loan. We actually are a little more lenient than some other lenders too when it comes to qualifying for credit scores or DTI or things, and you'll go above and beyond to make it work for the veteran and the active duty service members, because we are serving them and we're in heavy markets. I mean, myself, I live right down the street from the Norfolk Naval Base, so we are in markets where we are serving these borrowers. But a lot of the stuff that comes up, not only the termite inspection, is having inadequate heating, unsafe water, septic systems, and inaccessible crawl spaces. So these are all things that they look at. And like Wendy mentioned, an inspector might look at it on a conventional loan, but they're not diving deep into it like a VA appraiser and inspector is, to make sure that it's meeting VA's minimum standards. And we do have a lot of septics in our lending footprint, so there's still our properties that are on septic and the well testing has to be done. It has to meet minimum standards for well water testing, and that has to come back and be remedied if it's not meeting those standards. So those are other things that could delay you, but if we're taken care of and we're active on it and your loan officer finds out immediately, communicates it with you, we're communicating with the borrower, then we're able to get those things usually remedied very quickly.
The cost of these extra like mandatory inspections, are they on the seller or are they on the buyer?
Usually it's good practice for the real estate agent to negotiate this with the seller, especially, when it comes to a VA loan. Now, again, if you were doing a conventional loan, you could negotiate, but the seller can ultimately say that they want the buyer to pay, and that gets worked out. But usually real estate agents will work to negotiate that and have the seller pay that or negotiate other terms. And it sounds like Brian might have had some extra layers to add to that.
Yeah, years ago, and VA was kind of at a competitive disadvantage. They wouldn't let buyers, veterans pay for termite. They wouldn't let buyers, veterans pay for repairs. But they saw the issue with that, and now, even though, yes, VA does require termite, does require a water test. I always tell my agents and my clients, if you go conventional and you don't get that stuff, and all of a sudden 2 months into it, you find you got termites, so you find you've got well issues, who's the first person they're going to call is typically the real estate agent, and then they're going to call the lender and ask why not. So, I know I'm in near Fort Bragg when we protect our veterans, but even on a conventional or FHA, I typically say, hey, this is stuff you want.
Right.
In my opinion, you're borrowing $300,000, $400,000, $500,000. What's an extra $100 or so?
Yeah, and when a well and septic is a couple $100, and even if the veteran, like Brian mentioned, paid for it, I know well and septic issues all too well. I have a lot of family on them that lives out in more rural areas. That's not
me too.
30 minutes. Wendy, my family lives near you. So it can cost tens of thousands of dollars depending on what has to be done. So I'm sure your veteran and active duty service members would rather know there's an issue and be able to negotiate the sales price, negotiate seller concessions a little more, then go down that path. So I would certainly want to pay a couple $100 if it meant the seller wouldn't pay it, just to find out and say, I either want to walk away from this property or negotiate more.
Yeah.
Yeah, and I would even add, if you're, as a listing agent, if you're hesitant and you're not in a VA market, if you're hesitant to take a VA offer, put it in the accepted offer that the veteran pays for these things. If there's any lender required repairs or appraisal required repairs, put it in your offer that they pay for them.
Yeah, it's a good strategy for the listing agent. I know, in years past, the VA loan wasn't quite as attractive because of all these different limitations and what was, on the onus of the seller. But now with the VA changing some of those requirements and the buyer able to do a lot of the repairs or the cost on their own, it makes that VA loan more attractive. And of course, that's the ultimate goal, is that we help these veterans get into homes and they're able to use these benefits that they served for us, and they earned these benefits. So I'm glad that they've made those adjustments. And yeah, absolutely representing as a representative of a listing side. It could be a veteran also selling their home, but having those things, for an agent to be able to negotiate or add to contracts is important verbiage.
Yeah, I want to add something there if you don't mind real quick. Last year, there's a certain spot where I do business in Maryland where we had 5 VA appraisers sign off on a property, and then the septic company went in afterwards and we needed total replacement, and 2 of them needed drain fields. So you can't always put, well, if the appraiser doesn't catch it, it's working, because he's only turning on water and flushing toilets. He's not going out there and popping open caps or checking the well test and things like that. So for my veterans, luckily, because they did those tests, even though they weren't required, they were able to negotiate with the seller to get those fixed before they purchased. Had they not done the test, they would have bought those homes and that would have been on them. And to Brian's point, they're going to start pointing fingers of, did somebody look out for me? Because now I got to take on this $20,000 repair. And how did this pass? So be careful.
Yeah, absolutely. So let's talk about some myth busting.
We kind of went over some of these and we've touched on these, but VA loans being difficult to close. So we heard a little bit from both Brian and Rick here and their experiences. Wendy's touched on it a bit, but they're not harder to close if we just plan. The biggest thing is, our loan officers have mentioned is the appraisal turn times, which we don't control. Where, you might have dealt with us and done a conventional FHA loan, we can rush it. We can get that appraisal in. We can get appraisal transferred quickly. VA loans, we follow VA. VA has their own panel. They dictate the turn times. It can be 10 days. It can be, a little bit longer, a little bit shorter. It just depends. But as long as you plan for that and plan, like Rick and Kennedy mentioned, about making sure if there's a well or septic, things are checked, things are inspected. As long as that information is communicated up front, they're not harder to close. Everybody's transparent in the transaction and knows, and we're able to still close very smoothly. There's not, additional risks and delays. There's not higher closing costs, or the underwriting standards aren't, more stringent when it comes to, qualifying. A lot of lenders will go down to 620. We can go all the way down to a 500 on a VA. So, it really just depends on your borrower and their overall, the veteran, the active duty member, and their overall quality of the loan. We look at their reserves, we look at their spending habits, we look at the credit score, and we also have credit specialists here, which I'm sure you've heard about and dealt with before, who can, analyze their credit reports and help them improve their score and get them in a better position, get them, a better rate buying power. So those are also added benefits that we have here to prevent risk and delay for your veterans and active duty. We mentioned before the single use only. Veterans can reuse their entitlement if it's restored by either refining out of a VA loan into a conventional or FHA, or they can sell their home and use it again to buy a new home as long as it's restored. So it's repeat benefits that they continue to get to use. And, our loan officers touched on the fact that you can use a split entitlement, but it's really most beneficial to do it when you have non-married veterans borrowing together, and then you can reuse it. If you have married veterans, only one uses it, the next one uses it for the next property, and they still get that lowered benefit of a lowered funding fee.
Love that.
No.
I thought it was interesting.
Oh yeah, I did too. I saw it. I saw it. Another one.
Well, they found it interesting, even if it wasn't.
No, I think it's you and I they find interesting, 100%.
Can you touch on bonus entitlement?
Absolutely. You want to go over that?
Yeah, and I'm going to use, because I know we're in different markets, and different markets are going to dictate different things. And the conforming rate, or the conforming loan limit, is $806,500. So let's say they're at Fort Bragg and then moving somewhere else, and they want to keep this house as a rental, and they bought just for quick math for this scenario, always check with your loan officer to do the numbers. But let's say they bought a house here for $300. So in my market, and again, conforming limits are different in different markets, it's $806,500. So they basically have $506,500 left to buy in a different market. They can still own the house in Fayetteville, North Carolina, and go buy in Virginia Beach or Maryland or wherever up to that dollar amount, that $506,500. So they can't have more than one house under a VA loan.
So they would get the 3.3 funding fee on the second home?
Here, in the North Carolina house, hypothetically, would be 2.15. They keep it. They rent it out. And the one in Virginia Beach, I'm just picking on Virginia Beach, but they're at 3.3.
And they can only do it up to the amount of money that they still have in their.
Well, let's just say, and just for kind of quick numbers, let's say that it was $500,000 left in their entitlement. okay? But in Virginia Beach, they wanted a $600,000 house. So there's a $100,000 difference, okay? And again, this is where agents need to rely on their loan officers. So there's a $100,000 difference. VA will guarantee it with a 25% of the difference down payment. So they could buy that $600,000 house with a $25,000 down payment in that scenario.
And still, and which is far less than what they would traditionally have to put down if they were doing conventional.
Yeah, conventional 5% is $30,000.
Correct. Okay.
Plus mortgage insurance on a conventional loan, so you wouldn't have MI on a VA deal on that scenario.
All right. I also didn't know that, so that's a really cool thing to learn. How many agents knew that you could still do another VA loan with them owning one before, or still?
Absolutely.
I love that. Perfect.
And I don't know if Brian or you guys touched on it, because I apologize, I stepped out, but I think one of the other big misconceptions sometimes is if someone's lost a property, which was a VA, you can use VA again. You just can't use that eligibility. So that same formula that Brian just used in his example, that eligibility be tied up to a property that was lost, but they still may have eligibility to use VA a second time. We would just have to go through that formula to see how much their max is, and then what they would need to bring the difference if it was in a higher area.
Good point.
Very cool. Okay, so does anyone have any questions for Allison, for Rick, for Brian? And we've got a lot of experts here talking about VA loans. I feel like I learned a lot, and I absolutely adore and love where I live. I mean, I've been born and raised in Hampton Roads, and that's completely military. So I appreciate the VA loan. Oh, we do have a question. Per the VA, you only have to live into the home for 1 year, and then you can rent it out and use your loan again, as long as they have a COE to do it. Is that kind of what you were just talking about, Brian, that they bought in Fort Bragg and then they got relocated to Virginia Beach? They lived in Fort Bragg for a year, so they can keep that and then buy another primary? Okay.
Yeah, I mean, I don't know, and Rick, if you do, please chime in. I don't know that it's a year, and the reason I say that is active duty close on a house, not knowing that he or she's coming down on orders, and a month after closing, they come down on orders, and they can't control that. So VA would see it that way. I've never heard of the 1 year. Rick, have you by chance?
There is a form you sign that says, I believe it's your intent. It's all
Your
about
intent. I know, I agree with that, but I've had customers come down on orders 2 days prior to closing, and because they can't at closing occupy that house, they can't close, period.
Right.
But I've also had the opposite if they've come down on orders a month or two after, and they call me and go, Brian, we've got the PCS. I'm like, well, there's nothing you can do. The day of closing is the day you're certifying that your intention is to occupy that house.
And I think that's what underwriters are looking for as well, right? As long as the orders are here, you're coming here. If something changes, what they don't probably want to see, to the question before, is you buy wherever, and then 6 months later you're buying again, but you're not relocating. And then they start to, okay, well, what's the purpose of this? Then we got to go deeper to go, why? Because you just purchased this home 6 months ago with VA. Now you want to use VA again. Are you trying to build a portfolio here, or what's going on? And that's where we have to dig deeper.
So your orders, or if you
It's just
I think Allison, that's a great takeaway.
I was typing it down. You probably saw my eyes moving to make sure we have it to go back. Just one thing I wanted to add, I think we didn't touch on, but most people are probably aware that properties can be single family homes, condos, VA approved, of course, which we also have a condo specialist that reviews all of our condos here, and new construction. And to touch on new construction, you all may have heard of it, but we also offer a product where the veteran or active duty service member can use a conventional 95% construction loan for a property they're going to build. So they'll close and then begin building for 12 months and pay interest only. So they'll put 5% down for this conventional loan. We would order a VA appraisal to satisfy VA requirements, and then they'll be able to refi it out in 12 months or whenever construction's complete, if it's a shorter duration or a longer duration, and then use that 100% financing and then roll all their closing costs in to pay that construction loan off. And it's an added benefit for those that might want to do a brand new construction and start the construction after they close and just pay that interest only payment. And we get to fund the builder at closing a draw to begin the project as well, depending on, you know, the amount of the project, if they own the land currently or if they're buying the land with the contract. So that's something you want to inquire with our loan officers about as well.
Very good. The bonus entitlement only applies to active duty members. That's a question. Are you able to do that if you're a veteran, or do you have to be in active duty?
No, so long as you're a veteran, period. So long as you meet the guidelines and can get a certificate of eligibility.
So, okay. I think maybe that was me confusing the question if you weren't in the property for a year or whatever, but the bottom line is your bonus entitlement can be used regardless if you're active duty or veteran.
Correct. Who knows? I mean, they may own a house bought one in Maryland years ago and moving to North Carolina. So long as they've got enough VA entitlement left to get closer to the grandkids in retirement, then yeah, we can do it.
Great. Any other questions? This is great. So I do have on my screen here, this is something that I'm really excited about and proud of. The tunnel to towers is close to our family, my son's best friend. He was a benefit of, he was a Gold Star family, and the tunnels to towers was a huge resource for his family when tragedy fell. So from now until the end of February, for any veteran that closes with Southern Trust, we are donating to Tunnels to Towers in their name. It can be in memory of someone. It can be, and it doesn't matter. But the borrower will receive this form from us that says, like, how would you like your Tunnels to Towers be associated with your name? So it's something I'm really proud of. I think Tunnels to Towers is a really cool program, especially, where they come in and they pay off, surviving spouse and families' mortgages, or they are rehabilitating homes so that they can, disabled veterans can live independently and happy. So I think it's a very cool program. But we are happy to provide you information on this as well. All right. Any other questions before we round up? Cool. All right. Well, this is almost a week to Thanksgiving. So I hope everyone enjoys your Thanksgiving. I hope you have time to spend with your family and your friends. And we are all very grateful for your partnership and support of Southern Trust and our loan officers. And have a wonderful Turkey Day. Gobble gobble.
Thank you.
Thank you guys for doing this.
All right, thank you. Thanks, Allison.
Thanks, Wendy.